Alright, hello and welcome to Camel Finance. I'm your boy Camel, and we're coming off the back of the Fed minutes yesterday. So I want to break this down and make this easy for anyone to understand. This will be somewhat of an oversimplified summary, but hopefully we can aim this at everyone and just get the crux of exactly what the minutes are and what we can take from the minutes yesterday. So first of all, what are the minutes? They're essentially two things. They're an account of what happened, what transpired at the last Fed meeting, the FOMC, and they're a tool of monetary policy. So the Fed will look at the market reaction post-meeting and use the minutes to correct any misunderstandings. And so there's an important point to make about this, because essentially what happened was we saw a peak CPI print, right? The market started to rally. They actually found a bottom on a hot CPI print. When we got that 9.1%, I think it was 9.1, that print over 9%, the market started to rally because they were forward looking. The markets were already pricing in that was the peak of inflation. And then we got the last CPI print, which came in at 8 point something, 8.9, 8.7%. And so then that sort of confirmed to the market that had been front running seeing peak inflation, that we had potentially seen peak inflation, because now we were getting a print below that of the 9.1, right? And so the Fed is watching the markets rally, and they're watching this big bounce out of oversold conditions occur. And they have to come out and make these sorts of comments just to keep everything under control. And so we'll get into this in a little bit more detail. But here's what you need to know. The Fed says that it still sees interest rate hikes continuing until inflation eases substantially. So this is a hawkish approach. This is bearish. They are telling the markets that don't get your hopes up for a pivot. And they are letting everybody know that they're going to keep hiking rates because they need to get inflation under control, or at least that's what they're telling us. They're also telling us that the unemployment rate was projected to start rising in the second half of this year. So they're telling us that they want to continue to hike rates and continue to pretend like they want to fight inflation, whilst at the same time telling us to brace ourselves for a rising level of unemployment to come in for the rest of this year. So of course, we've already had 2 consecutive quarters of negative GDP growth, which would be the classical and technical indicator for a recession. And now the last sort of piece to this puzzle would be for unemployment rate to spike, because deep into a recession, employers start to lay off employees. Okay, companies start to cut their staff numbers in order to save money, and this causes the unemployment rate to move up. They also said that participants agreed there was little evidence that inflationary pressures were easing, and that the situation would take a long time to resolve. So again, they're sort of on the one hand telling us they see interest rate hikes coming, they've got to continue to do that, but don't worry, we are hell-bent on fighting inflation. But then at the same time, they're telling us that probably it's not going anywhere. Inflation's going to be persistent for a while. This is overall shaking the markets up a little bit. People are slightly bearish about all of this, understandably so, because essentially the Fed is saying that they're not going to be super accommodative to markets, and they're going to be much more hell-bent on hiking rates into a slowing economy in order to try to stem inflation. So in short, please, core inflation, come down 2% without a recession. Please. We want to see core sticky prices decelerating. Commodity drawdowns are not enough, guys. But yeah, anyway, let's hope that hiking Fed funds to 3.5% and keeping them there for a bit will be enough to kill inflation. We really want core inflation down, but we don't want to hike to 5%. And this is basically it. This is exactly what they're saying. The Fed is trying to engineer a soft landing. They could kill inflation dead by just hiking rates to 10, 15, 20%. They could just do that and then inflation would be gone. Okay. However, if they did that, it would send the economy and the stock market and everything else into the Great Depression 2.0, wouldn't it? Everything would get absolutely crushed. So the Fed is undergoing this balancing act where it's trying to act like it doesn't want inflation, even though it needs inflation because of the amount of debt it has, and there's no other way to service that debt apart from to inflate it away. But they have to create the illusion that they want to get rid of inflation. They have to do this whilst propping up the stock market as best as they can. So they don't mind having some pain in the short term, but remember, they can't just allow the stocks to crash to zero, because then they will have too much debt relative to their assets. The Fed's Bowman said some retirees may feel compelled to return to work due to inflation. Now, I think feel compelled is an interesting choice of words. I think what he really means is inflation is going to be so bad that these retirees are going to be forced to come back to work because they're not going to be able to put meat on the table without doing so. The UK inflation has just hit a 40-year high, 10.1%, as food and energy prices surge. Of course, this 10.1% is a Mickey Mouse number, and it is at least double that. It is at least double that. In the Eurozone, the annual inflation is expected to be 8.9% for July, up from 8.6%. And again, double it and add some, because that's the real world number, as you know. And so, in summary, we've got the Fed acting like they're going to continue to be hawkish. Now, maybe they will, maybe they won't. That remains to be seen. I've long been calling for a dovish pivot around September, and I still think that's absolutely on the cards. But we have to keep in mind that if we look at the S&P 500, you know, here is where we got the 9 print, the CPI, okay? So we got a hot CPI print here, and that put the bottom in for the stock market. Then we got an 8.9, I think it was this one, and that kind of confirmed to the market that we have seen peak inflation. And so the market is front running this. Then at the last FOMC, we had the Fed come out and say that they were open to slowing down the amount of rate hikes. They were open to reducing the amount of rate hike that they would be applying. They were saying they were open to doing 50 basis points and maybe even 25 basis points if that's what was required. And so at this point, the market has just gone full bore bull and decided the Fed is basically going to pivot in September. As I've been saying, this has become, at the time I was saying this was a very unpopular opinion. Up until yesterday's minutes, there was a growing consensus that the Fed was close to a pivot. And so the market is going to continue to price this in unless the Fed comes out in its minutes and performs this correcting of misunderstanding. The Fed doesn't want everyone to know that they're coming up to possibly having to pivot. They don't want everyone to know that because the market will front run it, and that makes the job of the Fed incredibly difficult. How do you justify a dovish pivot when the stock market is flying? Okay, the pivot is supposed to catalyze the rally. So if the stock market continues to just send to all-time highs, then what does a pivot look like? Okay, it would be out of control. So they have to come out, in my opinion, and say that everyone can chill out about the pivot, don't get your hopes up, we're going to continue to hike rates. But at the same time, they are telling us that inflation is likely not going away. It's going to take a long time to resolve this issue. Retirees might have to come back out of retirement in order to put meat on the table. And we're seeing it in the real world as inflation continues to print new high numbers around the world. So overall, I think the Fed minutes were essentially a non-event. The Fed, when markets are falling, the Fed's job is to come and ease people's concerns, to take some of that fear out of the market. And it comes and does that by saying things like, we're prepared to be accommodative where possible. If interest rates are getting too high, we're prepared to think about pausing them. You know, this is the Fed's job. But equally, when the markets start to get overheated and overextended in a short period of time, like they have been of late, the Fed's job is to come in and sort of tame the markets a little bit. This is what they have to do. They have to announce these minutes because people are getting too excited about this certain pivot in September, whether it comes in September, whether it's a bit later, whether it's as late as early next year, January or February, that they start cutting rates or pausing them. Nobody really knows as yet. But one thing we do know is they cannot just continue to hike rates into a slowing economy. They're having to try their best and pull out all the stops. They're having to change the definition of recession to try to make these sorts of moves seem justified. They keep pretending like they want to fight inflation, but of course they do not want to fight inflation. So I think they did a reasonably good job. This should lead to some level of correction, some level of cooling off. Perhaps we get a couple more pumps that fail before we get that true dip. We'll soon find out. September coming into focus. We've got Jackson Hole on the 25th. So markets will be looking forward to 25th to the 27th because that's when we should get some level of clue from the Fed as to what their plan is, truly what their plan is in terms of whether we're going to see this pivot or not. In the meantime, it will be important to respect risk. And of course, we know inflation is not going anywhere. So accumulating real hard inflation resistant currency like gold, like silver and like Bitcoin is something that is highly important for anybody wishing to protect their wealth and store their value. Speaking of Bitcoin, the largest investment bank in Latin America is going to enable Bitcoin withdrawals on its exchange. So again, we are continuing to see Bitcoin adoption, and this will be continuing throughout the decade, I'm sure. Russia is proposing its own international standard for precious metals after getting banned by the London Bullion Market Association. Here it comes. Gold is setting up to fly. If you've been watching the channel, you'll know I'm long gold. You know I believe that we are going to see some real fireworks from gold over the coming months. So we'll get to that in just a second. Quick bit of reset news before we do the charts. This man, everyone knows this man, donated 13 million to The Atlantic and to The Guardian. Had to be 13, didn't it? What do they have to say about meat? Well, let me show you. Climate-friendly diets make a huge difference, even if you don't go all-out vegan. Plant-based meat, by far the best climate investment, report finds. The ethics of a vegan diet. What's different about the Impossible Burger? Plant-based food entrepreneurs are marketing their meatless products to omnivores. The most damaging farm product? Organic, pasture-fed beef and lamb. Really? How to be a good person without annoying everyone. There's a simple trick to provoking better behavior without seeming like a self-righteous jerk. Will we ever stop eating animal meat? These headlines alone tell a story, an anti-meat story. They state eating vegan makes you a good and ethical person, and it's a sign that you care about the environment. What does this mean for the inverse? Meat eaters? Bad people? Unethical? Don't care about the environment? There's a link here to a compilation of all of this man's investments in plant-based food companies, so you can see the corruption that lies within. I'm sure you're probably already aware of this. This is a really long thread, so you can go and check this out in your own time if you want to see that. But you can see that they really don't want you to eat meat, and they seem to really want you to eat bugs. So I will continue to update on this as and when I see something. Finally, before we get into the charts, I wanted to point this out for a bit more contextual awareness, situational awareness. This is the S&P in 2008. You can see we had this drawdown of around 20%, a rally up to a downward sloping 200 moving average before a rejection and a new low. And what does it look like today? Well, we have a drawdown of a little over 20%, followed by a rally up to a downward sloping 200-day moving average and a seeming rejection for now. So this sort of suggests that new lows are on the table, or at least that's one outcome. And I do think, and I've been saying this the whole time, that that is one outcome. The current setup is looking an awful lot like the 2008 setup, which led to new lows. However, some level of pullback today is certainly to be expected over the coming days or weeks. But I would think we have a pretty good chance at forming a higher low that then becomes part of a larger base structure from which we can emerge and print new highs. So let's get into the charts. This obviously is looking overextended in the short term. We have yet to break down, as you can see. We're still holding this trend line for the S&P. Now that breakdown is likely going to come in the not too distant future, I would think. Whether it's as late as around the 25th at Jackson Hole, or whether it is today that we open up below this. But I would think now is a pretty good time, especially for getting in down here. Now is a pretty good time to be protecting profits. You definitely don't want to go giving loads of this back. There's always another opportunity to end on a new trend. So the trend is your friend until it isn't. Right now, this is holding. The NASDAQ, I've been publicly long the NASDAQ. We are just about hanging on to this support. I think down here, could close below this upward sloping blue trend line, and that would be a pretty good place to exit the trade and protect profit. If you wanted to be a bit more, let's say, shooting for the stars on this, if you wanted to continue to push this as hard as physically possible, then all the time we're above this red downward sloping trend line, you could classify this as a breakout, retest and resumption. So therefore, if you don't want to exit right here, you could potentially wait for closing back underneath this. And if you really wanted to say, I'm not getting out of this trade, I'm going to continue to push this until we've got true structural breakdown, then that true structural breakdown would come at this level here. Taking out this low would produce structural damage on this chart, and therefore would be indicative of the bull trend being truly exhausted. So that's that. I'm not going to give back that much profit. I'm going to be out somewhere around here in the worst case scenario. So I'm hoping to get one more bounce and one more push, in which case I'll exit up here. But if I don't get that, this is my absolute, where is it? Yeah, right here. This is my absolute line in the sand. I don't really want to be giving back any more profit than that. And I think if we get a daily close below this blue trend line, then I'll be locking in my profit. The VIX is into resistance again this morning and getting rejected, but I think this is getting ready to go, especially if the S&P 500 breaks down from its trend. This will break out. So I'm keeping a close eye on that, because this will likely pump pretty hard if it was to break out. The UKX, look, we're barely hanging on to this, aren't we? So again, a daily close outside of this trend line, and I think I'm just going to take the profit. This was my line in the sand that I flagged, this green line here. I said I'm definitely not giving back any more profit than that, but I think even if we were to close here, I'll just take the profit, because why not, right? And what's the worst case scenario? If I take profit there and we maybe get a push to here, well, fine, whatever, it is what it is. But from here to here, that's pretty good, I think. So a daily close outside of this line, and I'll be out of this trade. Still lining up real. I like the look of this a lot. Sort of working our way up to this trend line. Where it comes, I don't know. Does it have to dip down and test the lows one more time? Possibly. But I've got the trigger, as you can see here, ready to line this one up. And this should be a quick, what would this be? Hopefully a quick bag, quick 100 to 130%. We'll see how that goes if we can get there. Oil, kind of more of the same, isn't it? It's just slowly grinding down. It's kind of in the target area, but we have to be open to $65 a barrel oil. We'll see how this goes. Long ready to go if it shows me the strength, but I just don't foresee this happening in the near future at the moment. Gold looking to put in some sort of cycle low by the looks of things. I think maybe a couple more days of down, or maybe up and then down, and then that becomes an add for me. Especially if we can break this trend line at long last. So we'll see how that goes, but for now, long and strong and continuing to push. Silver, exactly the same story, not much to report, and for the miners as well. Wouldn't be surprised to see this drip back into the red short term, because this is much higher beta than the gold trade. So, but that's okay. That's okay. I will continue to update on this and continue to push. I'm not really sweating this or stressed out about this dip, to be honest. Kind of expected to see this, and I expect when we find the cycle low for gold over the coming days, this is going to rapidly produce a new local high. So that's that. Bitcoin, look at this, it's right into the trend line, isn't it? So the question is, do you exit now? Selling is always the hard part of the trade. Do you continue to push? It's really up to you. Of course, everyone is slightly different. Some people, the moment they see a trend line breach, they will just exit there. Other people want to wait for a daily close. I tend to fall in the wait for a daily close. And with Bitcoin and crypto, and if it was the daily close, it's all the way down here, then yeah, I would have been out somewhere up here. But whilst it's sort of hugging this line, you could say, oh, it's technically below, it's technically retesting before it goes lower. But I have no problem with giving this a day or two to show me. If I wake up tomorrow morning, perhaps, and the daily close is down here, then that's my exit. But I'm not looking to say, oh no, look, it's right on the line, time to exit. I'm going to keep a very close eye on this, and I am going to be respecting this trend line, and I will let you know as soon as I'm out of this trade. But what's to say that this doesn't move up and put in a new high? So I'll continue to monitor this, continue to keep an eye, but this to me is not a true trend line breakdown yet. So, and in fact, I can kind of show you what I mean. If I was to invert this like this, so now this is the same chart but upside down, is this a long? Well, not quite. It's right into resistance, right? It's trying to break out, but is this a long? No, not yet. We haven't got the close above. Would I be pulling the trigger for a long here? No. So it's the exact same thing in reverse. Has this truly broken down yet? No. So therefore, am I pulling the trigger? No. The same is true of Ethereum. Yes, it's kind of technically broken down. But again, if I was to invert this chart and look at this from the breakout side, is this a buy? Well, not really. It's not kind of... if it's up here and a daily close, then yeah, we can execute along there, right? If it was first thing in the morning and it's starting to really pump up on volume, then yeah, we can execute along there. But is this a true breakout or breakdown yet? No, not in my opinion. So long and strong, continue to push. Absolute line in the sand would be this prior low. But hopefully I'll get out much before that, I think. And one more push up here, and I'll certainly be happy to take the profit on that. So that's Ethereum. Of course, I will continue to update as soon as I make any material changes. And again, MATIC, it's kind of annoying, isn't it? I mean, you could argue and be stricter with this. You could move this down and it's still above, or you could take the closes, in which case it's violated it. But I think realistically, you have to do the same thing. You invert this. Is this a convincing breakout? Well, no, not really, right? Not really. So again, low volume, no momentum to the upside as yet, or to the downside in this case. So I'm keeping a very close eye, and I am going to respect this trend line. But again, you have to give it some room. There's nothing wrong if your strategy is as soon as it breaches to exit. And I actually did that here. This is like a very strong breakdown. And I think I said once we were down in this wick and I took some back off, I did that live on the channel. and then I added back up here to respect this risk, but we've not got that kind of downward momentum. Okay, so there's a time to respect it and there's a time not to. It just is what it is. The dollar looks like we could be trying to roll over. Dollar rolling over next week could be super bullish for gold, for the stocks, everything else, crypto, everything really. So assuming we just don't get some major pump up here, then I think things are lining up that the highs aren't quite in for everything yet. Have to be open to being wrong, of course, but my bias is that we will sort of roll over here. Again, I don't know. Wait for the chart to tell me that. But I'm not super worried at the moment, and I think even if this was to pump, I don't think we take out this high anytime soon. So that's the charts. Let me know in the comments if there's anything you want to see from me. If not, I'm your boy Camel. All the best. Take care. Cheers.